So I've got one thing that I think can dramatically increase your win rate as a trader. And more importantly, I think it can help you avoid choppy trades that normally lead to losses. Those choppy trades, we can all relate to this. They're very frustrating. You know what I mean? When you take a position, maybe you are trading a system and you think it's a good entry signal, but after you take the position, it doesn't move. Not only does it not move in your direction, it also doesn't move towards your stop loss. It chops sideways. So how do you avoid these? Because if you can cut out losses, you don't necessarily need to add wins. I mean that. Think about it. If you have a winning system already, why do you need to add more winning trading ideas to that system? Just trade the things that you know work to be winning ideas and cut out losses. So like I said, I have one thing that I'm going to share with you guys in this clip that's going to increase your win rate and help you remove some of these choppy trades that end up being losses, that end up frustrating you, that end up hurting your morale, and then end up digging you into a deeper hole that no one wants to be in as a new or struggling or trying to find consistency trader, right? So what we're going to talk about is the Asian range. Now, we have indicators at ASFX that actually present, or you could call it paint, the Asian range on the chart for you. So I'm going to put a link to a video that I have that explains how to set up your TradingView chart just like I have. For those of you watching this video live, I know a lot of you are in ASFX already, so you guys are already set up. But I'm only using two indicators. You can see in the top left corner, the ASFX EMAs and Asian range indicator, and the ASFX ADR indicator. And again, both of those indicators are linked in the video that I'm going to share in the description, okay? What we're going to look at specifically is this ASFX EMAs and Asian range. Now, you can see we've got our yellow 8 EMA, the red 21 EMA, the 50 EMA, the 200 EMA, and the 800 EMA, right? Below that, it says range high, range low, range fill. That's talking about the Asian range. Now, it's represented here by these horizontal lines. You can see one right here, and you can see one right here. They paint from the start of the day, the changeover of day, which is the vertical line right here, about 5 p.m. Eastern time, till about 1 a.m. Eastern time. That's the first 8 hours of the trading day. Think about it like this. There's 24 hours in a day. We have the Asian session, the London session, the New York session. Those are the three main trading sessions. Break up 24 into 3 8-hour sessions, 8, 16, 24. The math makes sense. Not super complicated. Remember, I dropped out of college, right? Come on. So you see the Asian range now presented with this indicator. So it paints it for you. So it actually makes this analysis I'm going to show you really easy. That's why I want to first make sure you guys are using this indicator. If you want to turn the fill on and you want to click the indicator like this, turn the fill on so you can see it as a dark range, and then you can even see it even more. Like if we make this pink and like that, there you can see that's the Asian range. So for this video, let's just use that, right? And then, of course, if you want, you can just go like this, like how I have it, where it's just lines, right? But let's go back to the pink, just so everybody sees it. The rule that you guys need to follow, this is what we teach in our courses, this is what I've been using for the last 6 years, and it's really made a dramatic difference in my trading. Every year, it just helps more and more. The rule is, if a pair is trading within its Asia high and Asia low, you want to wait for it to break above that Asia high or beneath that Asian low and close with a candle body. Now, I do all my trading on the 15-minute time frame, so each candle is 15 minutes. If you're trading on the 1 hour, the 4 hour, the daily, this rule doesn't apply as much, but it still is something you should consider and keep in the back of your mind. The reason why it's important is because if a pair is still trading at, let's say right now, 8:30 New York time, if it's still trading at this time within its initial high and low set in those first 8 hours, which was hours ago, that's a sign that it's already either made its move for the day or it's in consolidation for the day. So if we see something still trading in the Asian range, and I'm going to show you some examples here in a second, we want to wait for that Asian range to be broken before we go in and look to take trades. Even if we have a bias, even if we have the potential for an entry signal, we do not want to get into that trade until it's broken out of the Asian range. Now, there are going to be trades. If you take the ASFX courses and you learn, let's just say the A1 system, right? There are going to be trades where you see an A1 in the Asian range and let's just say it falls and just tanks and it's beautiful. For every one of those trades that's in the Asian range and it works, there's going to be 5, 6, maybe 7 losses that end up chopping sideways. So right there, the math says it's not worth it to trade in the Asian range. You'll find more wins, more high probability setups outside the Asian range. So let me show you how you can identify this very clearly. Now, we're going to work through a couple of examples because that's what makes it easy. CAD JPY here today This is a JPY, Japanese yen pair. So to see it still in the Asian range, within the Asia high and Asia low, to see it still within that range this late in the day at 9 a.m., that tells me that this pair is probably in consolidation today. I could be wrong. Maybe it breaks out later, and then that changes. But for now, this is saying it is still in consolidation for the day. On top of that, notice how it trades between the EMAs, between the 200 and the 50 EMAs. Those are the higher time frame significant EMAs. Another sign that it's in consolidation. Let's go to another example. EuroCAD. EuroCAD today broke the Asian range for the first time with this body. Once that body closed above the Asia high price right there, even if I put it in replay mode, you'll see it even clearer. Once we're out of the range like that, now we're good to look for entry signals as the day goes on. But until we get out of the Asian range like this, I wouldn't want to do anything with this. So since it's out, that could be something that does make it to the watch list. Now, I want to go through a couple of other ones that actually have entries today. We're going to look at James's trade this morning on Euro USD. So I extended the Asia high with this line. I'm going to make it a solid line so you can see it. These two solid lines are the Asia high and Asia low. This has to come down a little bit right there. So you can see it's from the pin high to the pin low of the first 8 hours of the trading day. James took his entry this morning still before we broke out of the Asian range right here, with support beneath him at the 200 EMA at the Asia low, but also with resistance from yesterday's high above him. So there was not that great of a setup this morning. I told him that. We already talked about it. But for this video, we're just talking about this Asian range. And if James would have said to himself, hey, let me just see if it'll break out of the range and I'll trade the pullback. Because then what you're trading is the break of this resistance level. You're trading the retest of that resistance level because then it's not resistance anymore, it's support. That's where we find the highest probability trades. I think partially the reason to get in early here before it breaks the range when we know it could be better is just aggressiveness, eagerness, the wanting to trade. Put it on a demo account. Scratch the itch over there, but don't put your real money into low probability setups. And anything inside the Asian range, to me, is a lower probability setup. Now, as the morning goes on, you can see, let's erase this. Erase this. You can see, what does it do? It does break above the Asian range right there. Now, if it had held the 21 and tried to come out of the range again, I would have said it's valid. We can trade from inside the Asian range only after it's broken with a body, not a pin. A body has to close above the Asia high. Hope that makes sense. If it doesn't, put questions in the chat, but that should make sense. Now, let's look over at something like, let's find another one. This one's perfect. Here, this is GBP AUD. Here's your Asia high. Here's your Asia low. It is out of the Asian range, so it's broken the range already, but it comes back down and trades between all the EMAs, the 800, the 200, and the 50. It's all very tight together. Another way that you can identify choppy pairs is by the swapping market sentiment line. The yellow line on the TDI down here can confirm that a pair is in consolidation, in reset, in accumulation, whatever word you want to call it. That's another way you can identify it. So if you find something, for example, like, let's find a better one. I'll come back to CHF-JPY. If you find something, yeah, this is perfect, like USD-JPY. See how this is in the Asian range until this bar right now, because it's getting pushed by the news candle. We had some US dollar news 10 minutes ago coming in. So you're seeing this get some volume now, of course, because it's a US dollar pair. But beforehand, look at how it's respecting the Asia high here and here. So you're not going to want to trade this until it gets out of that range. On top of that, look at the market sentiment line. It started under the 50 value and now is breaking above the 50 value. So that swapping market sentiment from below the 50 to above the 50 confirms that until this breaks out as it is now, this is in reset. This is in consolidation. Let's look at another one. We'll go to CHF-JPY. Here, this has been trying to induce people to take entries all morning. But again, if you're being particular, even with a good market sentiment line here, like that feeds short bias because it's under the 50 value, that's a good market sentiment line, you still don't want to take these entry signals because what'll happen? It'll find resistance to that low because it hasn't broken it yet. So this isn't complicated. I don't want to make this video clip too long. I just want you guys to see, even like this example here on CHFJPY, where you have an entry signal that fits the A1, that fits with the perfect market sentiment, when it looks good with trend, you don't want to take the trade until it gets out of the Asian range to increase probabilities. Of course, this could have fallen and made you money, but like I said, if you put 10 of these next to each other, which I have done through my back testing, and that's what's shared in the courses, you can watch that if you'd like for yourself, you'll see more of these will be losses or choppy sideways trades than winners. So here, you can avoid this loss just by being patient and saying, okay, I'll give it a few hours, let it break the Asian range, or maybe retest the range, and I would look for shorts here coming lower. That's it. It's that simple. Simple structure, simple breaks of the Asian range will help you avoid these slower, low probability trades. So again, just to summarize, if you're looking at a signal, like let's say you have a system, I'm going to assume you're trading one of our systems, A1, D1, or D2. That's what we teach at ASFX. If you're looking for the signal, you have a clear bias, make sure you are out of the Asian range and use the indicator to help you. That'll be linked, like I said, in the video in the description to this video. Go set up the indicators, use the Asian range indicator so you don't have to draw the lines yourself, and then just do the analysis. It takes you 10 seconds. Is this out of the Asian range with a body or not? If it's not, wait for it to break out. You're going to increase your win rate. You're not going to hit as many trades naturally. You're going to have to be more selective and wait and maybe even miss a few moves that you knew it would move lower, but you're not in it. That's going to happen. That's part of this business. But you're going to increase your win rate and cut out those losses, like I said at the beginning of the clip. And that's the goal if you're looking for more consistent results. So if you have any questions, put them in the chat, but I think I covered it pretty clearly. Yeah? Tariq said, what are your thoughts if you can get 2R to the Asia high or low? Great question. Very fair question. Same rules apply. I'm saying the same thing. Even if you can get 2R, it still is potentially going to not make it to that Asia low. For example, if you look with this CHF JPY, let me just erase this white. Notice how what this has been doing this morning. If you look at this price level, it's been testing this level. This level here is higher than the low. So if you were trying to trade from the top down, you're reading risk reward to the bottom, but notice it doesn't make it to the bottom. That's my point. So even if that 2R is there, it still could be very, very choppy. And that's why I would say still no. Put it on a demo account. Or if you do it with very small size. Take your C setup size, cut it in half. Okay? Good. Everybody's learning. I see the comments. Everybody loves it. Awesome. All right, good. Then I did a good job. So the only knock at the trade is the Asian range. We should avoid the trade or grade it as a C. Good question again. If the only knock is that it's in the Asian range, I would grade it as a C and cut the size in half. And I still would probably avoid it. That's just me. Because how often do you see me in Asian range trades, Mohammed or Quaylen or anybody? Very, very rarely. Go watch my trade recaps. You will not see me in trades that are in the Asian range very often. It's just not where I find clean trend, clean, beautiful moves. Like with this GBP NZD move, see how this is starting to pick up momentum here? That's only happening because this is